Hello, and welcome to Tracking Error, the podcast about money and markets. This is a Bridgwick Partners production. Let's get to it.
This podcast is for informational and entertainment purposes only and is not investment advice. Please do not take anything discussed as a recommendation. Contributors to this podcast may or may not have positions in the themes discussed. Do your own research and speak with a regulated financial advisor. Full disclaimer in the show notes.
Welcome to episode 4 of Tracking Error, where today we talked about sports investing. Super good episode, by the way. In an increasingly on-demand world, sports, and specifically live sports, remains one of the only events by appointment happening at a specific time in a specific place. And this isn't new. 776 years before Christ, more than 50,000 Greeks would cram into the stadium in Olympia to watch people do running races and wrestle each other at the ancient Olympic Games. So sport has always captured attention. And you can see this in the broadcast figures. The top 10 broadcasts of all time in the US are Super Bowls, and the top broadcast in the UK remains the 1966 World Cup final, despite the population being 22% smaller back then. So it's captured more attention than the moon landing or any other royal event. And look, there are two other reasons I wanted to talk about sports and why there's such a tailwind in this sector from an investment perspective. The first one is a subject we can't get away from: AI. People view sports as something of a hedge to the rise of artificial intelligence for two reasons. One, AI will never replace unscripted stories. It will never replace people going and feeling that sense of community at a stadium, watching their favorite characters play out a story where they don't know the end. The other side, if you really believe in the tail impact of AI, everyone's going to be unemployed and on universal basic income. And so people's weekends are going to look like the rest of the week as well. And so they're going to spend 7 days a week on wellness and health and mass participation and going to watch live sports. So as a hedge to AI, sports is a super, super interesting place to be. The second is geopolitics. And you're seeing a lot of sovereigns piling money into sports assets, and potentially they don't have an investment return or a performance goal in mind. We touch on that and a lot more in the episode. It was super fun. Hope you enjoy it. Let's go. I'm delighted to welcome someone that might have the best job in finance, pairing investment banking, corporate advice with sports as an asset class. So Alexander Robertson, welcome to Tracking Error. Great to have you.
Thank you very much. Great to be here.
So you lead sports coverage at Rothschild. What does that mean? Who are your clients and how do you help them?
Absolutely, yeah. So I've been leading sports advisory and global sports coverage at Rothschild for about the last 5 years or so now. Been covering the space more broadly for just under 10 years. My first client when I joined Rothschild & Co. was Tottenham Hotspur back in the day. And just been building up
Fortunate for you.
Exactly. Been building up how much we've done over that time. It's been a real boom period for the sector. You know, really, I've kind of followed the journey as sport has become more of its own asset class, as it's become more institutionalized, as more investors have taken more of an interest in it. So what do we do now? I mean, I'll break it up into kind of a couple of ways of thinking about it. In terms of who do we work with? So really, we divide this up into three main areas. The first one, which is probably what people all think of when you first say kind of sports investing, is teams and franchises. So I mentioned people like Tottenham, but, you know, pick any team, whether it be in football, whether it be US sports, whether it be Formula One, whether it be cricket, rugby, you know, all of those kind of teams. Next is the rights holders. So, you know, people like the Premier League itself, rather than the teams playing in the Premier League. And there's been lots of activity across the rugby space, lots of activity across the golf space as well. And the third main area in terms of who are our clients, or what are the assets that we tend to work with, is the broader ecosystem. So these are all of the other businesses which are servicing the area, whether this be sports tech, sports media, you know, broadcasters, you know, providers of equipment, providers of services in stadiums, all of these kind of areas. So really, those are the way we think about the kind of broader ecosystem, those three areas across the space. In terms of who we're actually advising, it can be the owners of these teams, it can be, you know, the owners of the leagues, which is usually the owners of the teams or the teams themselves, or it can be, you know, the investors or the founders of these businesses in that kind of wider ecosystem. And we're advising them on everything from M&A, taking investment, raising money, raising debt, or more general, corporate finance and strategic advice.
So it's the entire space, really. Anything sort of that touches or has an element of sports inside of it, you guys are advising on.
I think that's one of the key things as well, is that, 10 years ago or so, it was mainly the teams or, with a few other pieces. And it is the fact that, just the definition of sport has just become wider and wider and wider and wider. And the interesting thing that we're seeing as well is that, when you think about something which is sports and, so if it's, it's sports media, it's sports and media, or it's sports and tech, or, sports and real estate, is that the sports side of it now is usually the driving factor. If you're talking to a private equity individual, who is the one who is typically doing that? It's someone who's focused on the sports end market rather than the media or the tech kind of, how it works. It's all about where's the growth. I'm investing in this to get access to the sports end market, not because I think the tech is something that, is incredible.
And as you think about those three pillars, which sports do you kind of overlay in that? Obviously, there are some sports that make a lot of money and incredibly successfully. Think about football and tennis and golf. And then on the other side, you've mentioned a couple where there's been, a bit of activity in recent times, being maybe a rugby, a cricket, or things like rowing or parts of athletics. What is that universe of sports that kind of drop into those pillars for you guys?
I mean, there really is a reason why it can be all of them. And so there are different arguments for each of them individually. Look, football is a huge one. There is more money going into football than anything else. And so for obvious reasons, there's always a lot of activity in football, all the way through the teams, through the rights holders and everything else. Think about a football stadium, think about how many fans are going through that, think about the merchandise, all of these kind of areas. But then at the other end of the spectrum, you've got emerging sports and emerging leagues. So, things like, E1 series, electric powerboating series, or you've got things like the X Games, or all of these kind of areas where, people are viewing that because it's different, because it's got, influencers involved and celebrities involved, and it is different. So that's why the interest is there in that piece. And then you also have kind of everything in the middle, where there is usually an argument of, this has got a huge following but isn't being monetized very well. You mentioned things like rowing. You could pretty reliably kind of every 4 years expect to see something around at least one of those Olympic sports where someone is saying, everybody was obsessed with this during the Olympics. Yeah. Surely we can make this more than a once every 4 year thing. There's been mixed success with that, but there is an argument why everything has a good investment thesis.
And from an investment perspective, as you've talked through those different sports, it sort of sounds like, maybe the blue chip investment grade at one end, and then the emerging sports being more of a kind of venture equity upside story. Is that the right way to think about it, or not really in the sports space?
Not necessarily. There are certainly some reasons to think about it that way. I mean, one of the key challenges when we talked about, yes, in a sport in terms of football, but if you're focusing more on the team side, where more of the opportunities are, and particularly if we go into US sport and think about, NFL, NBA, these kind of things, they're certainly investment grade from one aspect in terms of, you can go online and you can find an index which shows the value of North American sports teams, and you can see that it's outperformed the S&P 500 over the last, 20 years or whatever. And that's Arctos's key thesis is, these are stable, compounding, returning assets. The challenge with that, though, is that they don't actually really generate meaningful cash flow. They're not kind of trading on cash flow metrics. That's starting to change. Things like the NBA, you can now produce 200 million a year of kind of free cash flow, but versus 7 to 10 billion valuations, that's still not really a cash flow multiple. So in the one sense, they're kind of that investment grade, because you also, like, as you said, that the NFL is just going to be an absolute machine for years and years to come, and therefore you can feel quite secure in that. And some of those emerging sports are more volatile, but I think that probably if you are really wanting to get into what's the most investment grade piece of the sports ecosystem, I actually think that kind of the rights holders, the leagues, are the most interesting piece from that perspective. And it's the bit which, CVC first really unlocked kind of back in 2018 when they did the Premiership Rugby deal. and then snowballed from there. And the Premiership Rugby has had challenges. They invested pre-COVID, all of those kind of challenges. And actually, when you look at how well they've done now, that shows just how kind of defensive it was from that aspect.
So do you see the space evolving into a business or, a set of businesses where they are measured on cash flow and profits? Or is this almost forever structurally going to be a space where you're investing at a multiple that you hope, potentially goes higher, or at least the top line has gone higher on the same multiple? Is that the story here in sports?
So on the team side, there's always going to be an element of that. But I do think that, 20 years' time, there's definitely an ambition to move more towards that kind of cash flow basis. I mean, look, the multiple you're going to be paying on a cash flow basis, I think, is always going to be significantly higher than you get on, just a typical cash flowing business. But particularly at that top end, nobody is there to lose money. So yes, there are non-financial reasons for investing alongside financial reasons. Very few people invest in a water company beyond the stable cash flow it generates. No one's doing it because they have a love of water.
Yeah.
Whereas in sport, people do love it, and it also brings other benefits. I've had owners of very, very, very large European teams say, I think I've made more money doing business deals owning this team than I have done from owning the team, which has done very well. This isn't a case where they've lost money owning the team. So I think that it is going to transition that way. One of the key arguments why people always get into the sport is they look at kind of metrics like fan base versus revenue, and they say, I'm only actually making like $1 per fan here. Surely I can do that better, and surely I can make that $2, and then I've doubled it. And so people do get into this to make money. Yes, there are other reasons, but they still want to make a return on their investment typically.
Let's go a bit deeper on that, because there's, you said there are other reasons to invest that maybe aren't financial. And, I'm wearing an Essex Cricket, my Essex Cricket jersey today. And if I was an ultra high net worth individual with that club where, some more money would be helpful for Essex Cricket, I think. As a fan, as long as I didn't lose money, but the team were to go on to win more, I might be willing to hold that investment for a very, very long time because it benefits the community. And to your point, are there other deals that you can do kind of being as part of an ownership group there? But so you have ultra high net worth individuals where there's maybe a passion, lifestyle, positive externalities from owning a team. You have sovereign wealth, which I'd love you to kind of talk about what's happening there. And then you've mentioned a couple of names, CVC and Arctos, but you could throw in, others who are kind of coming into the space, a TPG and others, who clearly they're not charitable organizations with many other goals. So that strays more into the kind of pure financial. How do you think, when those investors are kind of sitting across the table from you and you're selling a team, you're advising an owner on a sale, how do you think about those three categories of buyer, I guess?
I mean, it's interesting how over time, I think it's been quite an organic evolution for some of these things where I think in the past, when families had their family offices and somebody expressed an interest in investing in sport, they maybe kind of said, well, look, okay, we'll put 10% of our net worth into this sports team and we'll keep the 90% in nice, secure, cash flow yielding assets. And then I think kind of over time, just that 10% has done so well that it's given people the confidence that actually this isn't just a kind of fun allocation of the portfolio. Yeah. This can actually be a real allocation of the portfolio. And yes, as we said, of course, there are people have interest in it and people can therefore get very involved in it and people have opinions. You want to keep those opinions focused on the right things and not on, who should be playing or who should be managing, which can be the challenge sometimes. But I think it's just been quite organic how as that piece of the portfolio has done well, people have decided actually this is more of a credible strategy. There are, of course, exceptions to this, and you do see situations where there's been an ownership, often sadly an owner passes away, it moves into trust, and one of the first things they do is sell the team because, the trustees of that trust are focused on much more, you said, again, defensive cash flow yielding assets. They just don't understand how to kind of own and value a sports team. So I think that it has been quite organic how it has moved from being just a fun thing into being an actual real asset class, as you said. I mean, when you move into then things like sovereigns, it's in some ways it's quite a similar story. Like, yes, that there are going to be reasons which get over that hurdle in terms of why are they interested in this? Does it tick certain boxes for them
from a policy perspective?
Exactly,
vision,
policy, vision, international brand, all of these kind of things. So you have that lens, but then again, they also do still need to make a return, and they aren't really there again usually to lose money from these things. So they still also want that to check out. So it just kind of potentially just shapes and limits the options you have available to you. I mean, going to again, picking our kind of high net worth individual example, often they will limit it by which country they want to go to. So the number of people who come and say, I want to buy a football club, but it has to be in London. And so that's why you can see a London premium, or if it's in a nice part of Europe, that's a nice bonus to have, because they want to go there, they want to bring their family there, they want to bring their friends there,
wherever it is.
Exactly. So there is an element of that, but it's always again usually just one element, and so the other elements do still need to stack up, and there need to be the other reasons for doing it. And then you kind of then mentioned finally just those pure rational investors. I mean, I think it's quite easy to follow generally where they've been putting their money, and you can see that there are just things that they just wouldn't go near, when a high net worth can have that ability to think slightly differently and have a slightly different risk profile. What would those things be?
Like, for as you think about themes that those institutional investors have gone after or not gone after, what would be on those lists?
I mean, the key one that they typically avoid are teams. So again, there are exceptions. This probably goes to your point around, do you see teams moving into this world where they are going to be a bit more financially sustainable? And I think the answer, again, is yes. And you're seeing that with institutional money going that way. But, a typical starting point is we're not interested in teams. And I actually think that one of the reasons that, kind of going back to the start of the conversation and thinking about that wider ecosystem, one of the reasons why that area has grown so much is because a lot of this institutional money saw what was going on in sport, saw all of the money flowing into the area, and thought, we've got to get access to this. Where do you start? Everyone goes to a team first. They reviewed the team and just thought, we just can't quite get there on this. This just feels a little bit too far from our area of expertise. What about these leagues? These feel like a good place to be, but there are only so many of them. There are 20 Premier League teams, but only one Premier League, and they're not even taking investment. So, there aren't that many of them. Finding a high quality one can be harder. So they've even gone one step further and said, well, actually, where else can I capture this money flowing through from the fans, etc.? And that's why you've ended up in that category with the kind of wider ecosystem being so exciting today.
Do you think those, and maybe parking that third crew of institutional investors, but ultra high net worth and sovereign, where there is that, potential element of non-financial returns for whatever reason that might be, do you think that has some element of increasing the multiples that are paid in this area, in this sector?
Absolutely. I mean, you'll see it on kind of every investment deck, just in terms of the brand, the loyalty that you have, and it can be hard to separate with some of these, the financial from the non-financial, because often the reason why it has that kind of non-financial appeal is because it has all these fans, and because it has all these fans, it has more monetization potential. So it's kind of a cycle there. So it's hard to completely separate them. But as I said, in terms of things like location, some people will just value a location higher than others, and that means therefore they're willing to pay that extra dollar more than the other person, which means that they win the auction or whatever and buy the asset.
Yeah, got you. And we across those three investors, we've talked about them a lot, but they're quite a specific group. And notice there's no, for a lot of things that we talk about on this podcast, there's no retail, for example, and that's because there's no sort of public avenue to access this sector. There are a few listed things, but they're very small free float or minority parts of it. Why do you think this sector today doesn't lend itself to sort of public ownership?
Yes, I mean, I think, jumping ahead, I think this is going to start changing, and I think we're going to see more of it. Without wishing to repeat myself, you can understand why a team would struggle being in a listed context. Many of been there and have tried, and you've got some of the big ones like Manchester United are still at the moment. And then actually, if you look back through the history, a number have been in the past and still are. I mean, you think things like Rangers and Celtic and, all of these kind of names have been listed. But when you just think about what an, typical public institutional investor is looking for, that's just not really covered by, by these teams, by these kind of types of assets. And you can even see it with the Man United share price, where it trades at a huge discount to where you would expect a transaction to happen. And that's even in the context of there having been one recently. The Glazers looking to selling a minority, it's not too hard to imagine that there might be another deal there at some point in the future. And even then, it still trades at a massive discount. So the public investors just struggle to understand that team side of things. But I think that as these other parts of the ecosystem are evolving, are becoming more professional, are becoming more institutional, I think we definitely could see more of this. And I think particularly the rights holder side could be interesting. We mentioned things like water and these kind of things, infrastructure assets. All of these are, make a lot of sense in public markets context. And you can see how something like, again, going back to CVC, that they've now rolled up all their assets into this vehicle called GSG. It suddenly made it much, much bigger than where they started. You're now talking about multiple billions size of assets, which is paying out.
This is the Six Nations, and
you've got the rugby assets, Six Nations, Prem Rugby, URC. You've got volleyball, but then also more importantly, you've got their stake in La Liga, and their stake in the French Football League Liga as well. And those are the multi-billion assets there. And so I think that they're potentially on a path to one day being public. They've put them together. They've brought in some debt. They've brought in some new investors, and I think that a listing one day of that would make a lot of sense. And you can put a clean dividend yield on that and look at how that compares, and would be much more, I think, successful and and speak to the same kind of metrics that these public markets investors are used to seeing.
Interesting. Okay. Interesting direction of travel. We've touched a little bit on sort of franchising and US-ification, Moroccanization of European sports. I'm going to say something controversial, which is not broadly true, but see if you think it directionally is. That US sports are more boring to watch, but make money, and European sports are more interesting to watch, and there's a broader number of sports to watch, but they don't make money, and actually a lot of them are not financially sustainable. Do you think that's true?
Well, you maybe slightly answered your question at the beginning when you mentioned those stats around the Super Bowl and the NFL and these kind of things, and the fact that out of the top 100 broadcasts in the US, I think 97 of them usually are NFL, and the other 3 are US college football, as in American football. Yeah. So clearly the population, at least in America, thinks that, they're interesting to watch. And perhaps that European sports for them are less interesting to watch. I think that's probably just more of a history and
cultural thing,
exactly, and a cultural thing. I mean, I think there are pros and cons to both. I mean, I think that, the history heritage that you have with the European sports and the European teams, you definitely can't recreate. I mean, the major North American sports have that as well. But when you think about kind of creating new franchises, which you're seeing in certain sports now, I think that's a lot harder. I think that one of the benefits that US sports has, though, is that they can manipulate their products a little bit more. They do have more, as you said, they make money, more cost controls, which kind of levels the playing field. And I think the incredible thing is just that they've actually managed to get the ownership to want to do this. There's very much a feeling of, we want our league to be as good as possible, and kind of rising tide lifts all boats kind of mentality. Whereas I'd say that in European sport, that's not always the case. Yeah. And quite often people would say, I'll happily go down 10% as long as they go down 20% kind of thing. So that kind of that fierce competitive rivalry is just through the roof. Whereas, there's much more that kind of club feel. This is a great thing for us all to be a part of. Let's make this all as good as possible. And we're going to make a bit of money along the way as well, in the US. So they're quite different feels for sure.
It seems like we're sort of going or have gone that way already with respect to kind of cricket and potentially rugby, getting to that with, the blast versus the 100 in cricket, and then, no relegation in the Prem. And then you kind of compare that to the European or the attempted European Super League on the football side, where there was, and that's more of a hybrid franchise model, but the backlash there was extremely large and very, very swift. So how do you see the trend of franchising in European sports going? Is it going to be in those sports that are less financially sustainable today, or for some of those teams, and they end up building out and potentially proving success and it coming to a broader number of sports? Or how do you see that playing out?
Yeah, I mean, I think the thing with the European Super League is that there clearly wasn't the call for that from the fans. The fans just did not want that. The fans think that the model works. They think the Premier League works. They think that Champions League works broadly. They don't feel a big need to change that. The stadiums are full. They're generally happy. And so when they see someone coming and trying to rip up that whole model that they're so used to, and seeing it being largely for the financial benefit of the owners, clearly there was a huge backlash to that. I think that in some of these other sports, things like rugby, things like cricket, people could understand and see the challenges those sports were facing more. I mean, just ask any fan of Wasps or London Irish or these kind of things, how they feel about, the sport. And there's clearly a problem, the fact that their team no longer exists. And, going back to earlier in the conversation, talking about people willing to lose money, it's been those people who have been sustaining, some of these cricket clubs, some of these rugby clubs for a long time. And that patience runs out at some point, and it's very hard to move the ownership on, because selling something which is fundamentally losing money is very, very challenging. However much it might be losing, even if it's only a small amount, just the knowledge of having to put money in every year really detracts from the interest and the value. So I think that rightly those sports have understood that the way to get more investment in, which will then feed through to improving the product for all of the fans, and the fans get this as well, is to make these teams more financially sustainable, to therefore bring the owners in who are willing to invest in growth rather than investing in losses. And that should be better for the sport overall.
Nice. And, the 100 has been a phenomenal success so far as a kind of packaged product back on terrestrial TV and clearing debts for a lot of the counties. So.
Yeah, exactly. And I mean, and that's also one where, it's always exciting when you can kind of really, tear up and restart a sport, which is a bit what they did in the 100. And I think there are some aspects which have been more successful and some which have been less successful. There's clearly been a lot of pushback on the actual change in format and whether that was needed. But I think that the transition to it being more family friendly, to promoting the women's game as well, those are very similar values to what we've seen with the growth of the WSL, where people say it's just such a more enjoyable day out to go to with the family. I think that being able to capture that has been a really, really interesting development, and something which, a lot of sports just can think about making that match day experience. How can that be the most appealing to the fan base they're looking to appeal to?
Let's move on to something as a little bit of a case study, I guess. Let's imagine that I've just sold my business and I'm mad keen to get involved in kind of sports investing and own a sports asset. What do conversations with individuals like that involve when you first sit down with them? What do you talk through? What do you need to know? How does that usually go?
Yeah, good question. I mean, we've got to start narrowing the funnel, because this could go in lots of different directions. So, I mean, a good first one is, how much have you got? How much do you want to invest? That's always a good starting point, because that can really shape where we go. So, I would start with that. I think another thing it's important to talk about is minority versus majority. Do you want to be the absolute controlling owner, the one who is sat in the middle chair, in the director's box with all the fans looking at them, the one whose pictures on the website, all of these kind of things? Or would you rather be along for the ride with some pals, with some co-investors? You go to the games, but kind of no one's calling for your head if the team loses, like you are, if or like people are if you're the primary owner.
And what do you see most people come in saying, I want a majority and to kind of, have my name above the door kind of thing? Or you find minority being actually reasonably attractive for a lot of people?
Yeah, look, absolutely both. So there are some people who could just never do minority. They just absolutely, almost want to, I guess, play football manager in a way, and they want to have that. They want to have that final say, and even if they know nothing about it. And again, if they've run businesses their whole life and they do still see this as a business, a hobby, but still a business, they just can't get their head around putting X amount in, and if there's an issue, not being able to change it. Whereas, other people see it as, somewhere between an expensive season ticket and a bit of a fun, bet on something where they're going to enjoy the journey and the value hopefully will go up over time, but it's going to be a good ride in the interim. I think that next definitely it makes sense to talk about, their interests. Do they have more of an interest in a team, or do they have more of an interest in a sport in some other way? That can take you in quite different directions. Where they want to be located, how much they know about it. One of the things that we do quite often see is a bit of a hybrid where people don't know that much about the sport or about the kind of thing they're going to be investing in, but they know a lot about something else, and they want to bring that to the asset. So I'd say that the one we always used to see was real estate. So big real estate investor, end of their career, wants to start putting some money into something interesting. Here's a sports club. Who needs to redevelop a stadium? Perfect. I can enjoy the sports club, get my hands a bit dirty, helping them with the stadium, use my contacts.
Provide some value to the team.
Have sensible and intelligent conversations in a really interesting way being in relation to a team. The new version of that is tech. All of these Silicon Valley investors now who are bringing much more of this data mindset, understanding different ways to monetize fans, really bringing some of that technology background into these sports teams and sports businesses. I think in your example, most of them, if they're kind of doing it from the sporting aspect, tend to be more focused on the team side, which is where we would probably spend more time. But you do see others who, want to become a serial VC investor, and they love investing in all these pieces around, some of that wider ecosystem piece and these cool startup companies who are providing these services. But it tends to be on the team side in your scenario.
So maybe we'll stay there then on the team side. You mentioned, two areas, one good, one bad, I guess, of being an owner. One is bringing really serious kind of world-class expertise that's adjacent to the team and bringing that value in this example being real estate. But then, some others maybe wading into going into the changing room and pointing at players and wondering why they're playing, being maybe on the other end of that spectrum. What else would you point to from, good and bad ownership of a team or a club? What have you seen over the years, or what's the model for that?
I mean, I think in terms of good, you just want them to be, it's hard to say often these people aren't, but kind of a slightly slower mover, slower thinker, just understand that sometimes you need a little bit of patience. And also having a really strong appreciation for what they know and what they don't know. So, again, it's a bit of a red flag if you've got someone who's got these super strong opinions on what's happening on the pitch and really wants to exert that influence. And so, having our conversation around majority versus minority, it's very good if someone says, whilst I might want majority, I really need to find the person who gets football and who's going to hold my hand through all of this. And, I'm investing in them to then kind of run this for me rather than thinking they're going to be running it themselves. So I think that, that fundamental knowledge of knowing what you know, knowing what you don't know is absolutely critical on the good side. I think on the negative side, it's people, maybe having a failure to see the long-term nature of the investment. A bit like a dog, it isn't just for Christmas. It's for a long time, and you might need to put investment in. It might take a long time to make a return, even if it is going to make a return. It takes some patience, and having an appreciation for the history that was there before. Understanding that often they say with, again, particularly football, you're not an owner, you're just a custodian, and it's been there before you. It's going to be there after you. You need to respect that. You need to respect the fans. Going back to Super League, the fans felt they owned those clubs, not the owners, and they had the right to say what should and shouldn't happen to them. So having an appreciation for that and working with that rather than trying to work against that, I think is absolutely critical.
And within the broader Rothschild business, obviously sports is a slice of that, but there's, you see expertise and operational excellence across sector. Where would you rate out of 10, I guess, in general, sports assets being operated? Is this a space where there are some, generally there's a lot of great professionals doing, good operational management of these businesses? Is it very sophisticated on that side? Or would you say there is, versus the average healthcare business, the average tech business being run, there's, because of what it is, it's part of a community and there's a lifestyle element and a passion and a hobby. Where would you rank the kind of operational management of teams generally within sports?
Yeah, I mean, you see a huge range. I mean, without doubt, one of the reasons why investors, particularly those more professional investors, are interested in this is because they feel there's an opportunity to do it better. They feel like these businesses haven't been run as businesses, and so there has to be a way to do that. But it can be from different angles. So there is plenty of examples in the sports space where things just haven't been invested in. They're absolutely shoestring budgets. No one understands why you need more than 3 people to run it, even though these are now huge businesses. There was when we were looking at the Six Nations a few years ago, someone kind of suddenly realised this would be like a FTSE 350 business, and there are about 20 people, running the whole thing. But then you also see things at the other end of the spectrum where sometimes these businesses are very bloated because they haven't had that kind of institutional rigor on them, and you've got 5 people doing the job that probably one person could do, but they've been great over the years and they're big fans and nobody really wants to make some of those tough decisions. But there are some really fantastic people in the space. There's an awful lot of experience in the space because lots of people are in it because they love it. They aren't going to leave it. You aren't going to bounce around industries often. So you've got a huge amount of experience, very specific, very dedicated to this space. And I think that when you marry that with, some of these new institutional investors coming in who really understand where to invest, where to cut, how to drive growth with those experienced industry operators, you can see some phenomenal results.
Yeah, I bet. Interesting. Slightly different question. Nearly 1.4 million people signed up to the 2027 London Marathon ballot. And of the eligible people that could, it worked out at 1.8% of the UK population, which is kind of nuts because a marathon is hard. This isn't a park run people are signing up for. So for nearly 2% of the UK population to sign up, just seems, crazy. So would love your views on sort of mass participation events, sort of grassroots, I don't know if you call it that, or operating races. The only example that kind of sprung to my mind was Providence's investment in Ironman, which was phenomenally successful. I think anytime you can get a customer to tattoo your logo on their body, you're probably onto something. But how do you think about that as a, and maybe with respect to AI and people having more leisure time potentially, how do you think about mass participation as a trend in the space?
Yeah, so look, it's definitely an interesting one, and it's the mass participation, and it's really the enthusiast nature, which we're seeing more and more now. And this is goes across society, but there aren't, interestingly with your stats, there aren't more runners. I think that generally running is kind of decreasing by like 1% a year or something. It's pretty stable, but it isn't accelerating. But what is accelerating, as you said, are things like this, entries for Ironman, things like High Rocks, all of these kind of areas, which
because inactivity is actually going up.
Exactly. And so, but what you aren't getting as many people who just go for a jog around the block. It seems like either you don't jog or you're on a marathon. There's not that much in between, it seems.
Social media effect.
Exactly. But so this is an area that we are seeing a lot of interest in, a lot of investment in, because these people are relatively kind of price inelastic. They are pretty happy to pay whatever you need to pay. Again, let's think about what we can think about London Marathon, but let's also think about something like High Rocks, which has had phenomenal growth over the last few years. And the piece that I want to pick up on that is that, and this is the case of marathons too, but you can look at the price of the entry, which, can be a few £100, a meaningful sum of money to kind of run around a hall and, use a bit of equipment that you find in your local gym. But it's not only that, people are traveling for these things. They're flying to different countries, paying for hotels. They're actually investing thousands in doing these things. And so you can see why an ability to capture this could be really interesting. And not many have done it. London Marathon isn't really available for external investment, haven't really taken external investment. You mentioned Ironman has, High Rocks is part of Infront, and so is part of more of a commercial entity. I think that the challenge that people would have, looking to invest in these businesses is just understanding what that moat around the business is. Something like CrossFit has had kind of slightly more highs and lows over time. Ironman has been pretty resilient. But so I think that finding ways to make sure that you're not a fad, and I think marathons are good for this because marathons have been around for a long time, and people will at least pass through a marathon era, even if they don't stay there forever. I think making sure that you've captured enough of those, a bit of diversification, try and bring a few together. I think can make it really interesting.
Are they too small? Is that the problem? The ticket size here is...
Some are, some aren't. You said that Ironman's a big business.
Yeah.
I know I'd love to see the numbers on London Marathon after next year when they double the number of people. Said CrossFit has been a very big business. So it's not always that it's too small. And as I said, I think that there's big attractions here in terms of, you said, people tattooing things on their body is a really good example. But I think it's just, there's a slight fear around, well, what stops someone deciding that I've had enough of running a marathon, I'm now going to go and do an Ironman and vice versa, and just having the belief that those customers will refill themselves.
Okay. Another interesting trend has been fans that sort of aren't fans in sports. And the example I'm going to use is Formula One and Drive to Survive, the show on Netflix, where you now have a group of people who have never been to an F1 race, have never watched an F1 race on TV, but they've bought merchandise. They know the drivers, they know the teams, they would call themselves an F1 fan. How did they achieve that in that sport? And do you see that going across the board for others as a model for people to repeat?
Yeah, I mean, they did a fantastic job, back in whenever it was kind of 2017, 2018 time, Liberty Media coming in, said launching Drive to Survive. For some reason, it seemed different to anything that had been done before. And obviously the sports documentary isn't particularly new. There have been sports documentaries before, but there was something about the way that they did that, really getting under the skin of it, which just captured people's attention way more. And I think it tapped into it at a time when you had already seen a bit of this trend. I mean, if you look now, I'll forget the exact stats, but people like Cristiano Ronaldo and Lionel Messi and people like this have got way more followers than their team has. So more people are saying, I follow, Lionel Messi than I follow Inter Miami, but even Barcelona or Real Madrid or these kind of things. And so you do see people following athletes now more than you see them following sports or following clubs. I think it also goes to the fact that people are consuming sports and content in different ways. And this has been one of the things that sports have really got to keep up on. And there are far more fans and there are people who watch all of your sport, as you said, who watch 90 minutes of a football match or who watch roughly 90 minutes of a Formula One race. People want to consume it in different ways. Sometimes that's highlights, sometimes that's documentaries, sometimes that's through Instagram and TikTok or even what they're doing away from the track. But they've become the celebrity, they've become the interest story. So Formula One just got there early in terms of how to really engage people in, a kind of whatever it was, 8 hours a year format, which just became almost appointment viewing for at least for a few years, and really brought people into the sport. And then that's proliferated from there. I think that, now it's about making sure that they, having captured that audience, it's about how they keep them, how they keep them entertained, how they keep them, kind of serviced going forwards, because at some point you need to slightly change things. And so this is where you might see changes in format or, said other ways of providing the content to really keep those fans engaged.
I think at this point, there's going to be a bunch of people that are like, God, I wish I had this guy's job. So let's keep going down that channel. You must have been to some amazing events and watched some incredible live sport and met some, obviously phenomenal people in the space. What's the best live sport you've ever seen, or corporate hospitality you've been to? What would be the highlights list of that?
Oh gosh, yeah. Lots of different ways we could think about this question, I've got to say. So I might have to pick out a few. I think in terms of a sport and the way that it's really integrated into the sport, it's probably a boring answer, but it's hard to knock what the NFL do. I mean, it's pretty special what they put on around it. Some people would hate this, but you kind of at times forget that there's actually a real top class sport going on at the same time. They've somehow married, what you see in some other sports. I won't name any names for risk of offending people, but where the sport's a bit of a sideshow and it's actually more about what's going on off the track or whatever it might be. They've kind of got the absolute best of both with the NFL, where there's so much going on off the pitch, but also what's going on the pitch is also phenomenal. So I'll have to give a shout out to the NFL there. I think maybe at another end of the spectrum, in terms of an emerging sport and thinking about how they really create a place for themselves in the world. I think E1 series, the electric powerboating series, has done a really interesting job where a lot of the money in sport is coming through things like corporate. It's a corporate business. It's business to business. It's hospitality. All of these kind of things. They've really focused on that as a package. It's kind of got a bit of like the horse racing cadence where you watch something for 10 minutes, then you come away, and they've got local music and local food, and they have interviews with the pilots or race directors or these kind of things. It's like it's almost like a festival going
packaged
on.
Product,
versus dare I say it, I've been at situations where I have, taken someone to hospitality at a football match, and if they're not a massive football fan, when you're then sat there for 45 minutes watching the football, they might not be absolutely loving it.
No, I had an even better one. I took a client to watch, they'd never seen cricket before in their life, and this was the ODI World Cup. And we went to Lord's. They'd read up on all the rules just beforehand, and we watched the first innings and had some lunch, and then he got up and said, "Oh, thank you for that. What a brilliant day." I said, "We've got another, got second innings." And he went, "No, I just can't. I can't do it."
Exactly,
because there wasn't that packaged product of a lot of different things to do. It was just the sport itself.
Yeah, and it's really important to these sports businesses now. I mean, someone like Wimbledon, they spend so much time thinking about how they curate that whole day, how all the restaurants fit in with it, what that means for people being in the seats. It's a really important part of the business model.
Yeah. Okay. Knowing what you know then, if an investor wants to get into sports, and there is firmly a investment performance returns angle to this, along with diversification and potentially hedges to other trends. And two parts to this. What would you be looking at from an investment perspective for something that's kind of very stable, that investment grade that is potentially a hedge, and something that is definitely emerging, but the upside is huge? What would you put into those two categories?
So I think on the first one, I find it hard to look past a really tier one rights holder. If you can find the opportunity to invest in a tier one or even kind of tier two or tier 1B rights holder, the economics around it just make it so hard for it to go that wrong. These businesses, the reason they kind of work so well is that they are paying out everything they create to their teams or their players, and that is their lifeblood. So the whole model is to generate money to pass through, and you just basically get alongside them and take some of that pass through. So you're just being given cash year in, year out. And so even without significant growth, when you just sit there, you're just clipping this return every single year. And teams can have ups and downs, and obviously leagues can go through periods of higher and lower popularity. But things like the Premier League, things like La Liga, they're not really going anywhere, and people are always going to be watching them. They are just that kind of funnel through which everything has to come. And so I think if you can find a way to get a piece of one of those rights holders, then you're in a pretty good spot.
Because they sort of sound like a regulator in a way. They're the sort of like, you think about the Six Nations maybe as an organizery, regulatory body, but actually there's a big, enormous commercial angle to that.
Huge, they are. We always call them commercial codes.
Yeah,
that is They are there to generate profit, to distribute to stakeholders. And if you can become one of those stakeholders, it's quite a nice place to be.
And the other end of the spectrum, the sort of more venture capital, massive potential upside.
So, yeah, I mean, I think that it would be, finding a way to be in one of these businesses which is providing a new service to monetize. I'll go with fans. There are a few that could have gone there. I could have gone with things like, on-pitch performance. I think it's an interesting area as well. But I think particularly if you can find a way to help unlock monetizing fans, then you're on to a real winner. Because fans often aren't monetized that well. One of the kind of tests that I always do on myself is I think, well, how would I broadly rank my interest in sports? And then how would I broadly rank how much of my money they take? And they're not very correlated. Some sports are fantastic at taking my money, and they're not my most favorite sport. And a sport that I would say, oh yeah, I absolutely love that sport, whereas I'm not actually paying very much money to. And that's because of the way that they are set up and the way that they can monetize me. So I think that some of these technologies which help clubs discover their fans more, find ways to interact with their fans. Think about a football club. You have 50,000 in the stadium. You've got X million in the UK, maybe, or 100,000 in the UK. But around the world, they've got so many fans who are never going to go to a game, who are never going to buy a Sky Sports subscription. So finding ways to tap into them, if you can find one of those businesses, then that could be really exciting.
Okay. Now for our traditional closing question then. What do you think most investors have wrong about the world? And feel free to take this outside of the world of sports investing if you want to, but just a sort of widely held belief that you think is potentially not quite right.
Well, yeah, I'll stick to what I know, but I'll apply it. I'll apply it more broadly. And I'm not sure that it's necessarily something which is a widely held belief or anything particularly novel, but I think just patience is the key thing that people need. I think patience and a little bit of diversification, you're in a very good place. But I think that if you start chopping and changing, that's when you just tend to stagnate. Even if you're not going backwards, you just need to give things time to settle. I mean, you could apply this in so many situations. You could apply it to a very micro level. A football manager, often if you just gave them a bit of time, they would suddenly bounce back and find a way to make it work when chopping and changing tends not to work so well. I mean, people will often challenge me and say, oh, but it's hard to make money with a football club. You don't actually generate profit. Money all flows out the bottom again. But if you look at these clubs who have been owned for 10 years, 20 years, nearly all of them have made phenomenal returns because you just need to be there at the time when the next leap happens. So, there was a leap when the TV rights of Premier League went through the roof and BT and Sky were competing, revenues went through the roof, and suddenly all those investors who were in before made a lot of money after. Formula One, people who were in before the Drive to Survive era have ridden that wave. And, even those who came in afterwards, people were saying, gosh, I can't believe these are now worth $1 billion. Well, they're now worth like $6 billion, So I think it's just about, not looking for that 1 or 2 year return and not expecting something to magically happen, but just believing that if you're in the right place in a business or a sport or whatever it might be that has relevance and which people are interested in, that if you're there for the long term, for 10 years plus, then good things will happen.
And the things you just mentioned there are not things that a team owner did to their team, right? There wasn't an action there. They were riding a kind of secular tailwind, which this sector very likely has in many, many areas. So patience and diversification. Love that.
Yeah.
Thank you for coming.
Pleasure.
That was
Thanks
awesome.
for having me.
Cheers.
Thanks.